Can HIM stock get to $100 by end of 2025? This is what I'm going to cover in this video. HIM's provided visibility into their 2030 numbers, and that is what I'm going to use as a reference. Before I continue, I want to clarify this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts on HIMs. Please consider liking this video and subscribing to the channel. HIMs reported their earnings and the stock is flat at the time of this recording, as shown on the screen. Let me now show you another snip that shows the summary of the recent earnings. They reported a revenue of $586 million, up 111% year over year in Q1 of 2025. Net income of $49.5 million, adjusted EBITDA of $91 million in Q1 of 2025. Based on this, the net profit margin is under 10% and adjusted EBITDA margin is under 20%. Subscribers grew to 2.4 million, up 38% year over year in Q1 of 2025. HIM's affirmed full year 2025 revenue guidance of $2.3 billion to $2.4 billion and raises adjusted EBITDA guidance to a range of $295 million to $335 million. Again, that represents adjusted EBITDA margin of about 15% on the high end. These are definitely stellar earnings. HIM's introduced 2030 targets of at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA. So HIMs are telling us that the adjusted EBITDA margin will still be about 20% even in 2030, and this is an important metric. Adjusted EBITDA excludes non-cash expenses like depreciation and amortization and potentially other items like interest and taxes to provide a clear picture of operating performance. In my personal opinion, it's not a number that I think is super valuable. Net income, on the other hand, includes all expenses. I would not claim that net income is the best metric, but I think it's much better than a lot of other metrics companies report. So in summary, there are a lot of adjustments to numbers in the adjusted EBITDA figure, but I'm giving it a rough estimate and saying that 50% of adjusted EBITDA will convert to net income. Again, this is just a rough estimate. Based on this, HIMs will have a net income of about $160 million in 2025, based on the adjusted EBITDA of $320 million. So for HIMs to hit $100 by 2025, investors should be willing to pay a multiple of 160. This seems very out of reach to me. If I go to price to sales, then it converts to 10. Price to sales of 10 may not seem too bad, but that is appropriate for growth companies with potential to get to 30% net margins like Snowflake, GitLab, Palantir, and not for companies like HIMs that can get to less teens percentage margins. Now, another question is that can they hit $100 by 2030? As seen on the screen, HIMs will have a net income of close to $600 million by 2030, based on their adjusted EBITDA metric of $1.3 billion. This also converts to 10% net profit margin based on $6.5 billion of revenue by 2030. Now, if I assign a multiple of 40, HIMs would be worth about $26 billion by 2030. HIMs currently has 246 million outstanding shares, and we do know that they dilute shareholders. Since they are profitable, they may slow it down on the dilution, but I'm still assuming 2% dilution. This will result in a share price of $100 by 2030. So in conclusion, I think $100 by end of this year, by the end of 2025, does not seem realistic unless there are some animal spirits and too much hype around the stock. Based on the fundamentals, they can get to $100 by 2030. But then HIMs has a history of sandbagging their guidance. If that is the case, then the stock should be well above $100. Let me know your thoughts in the comments, and thank you so much for watching.